Welcome back to the Loan Broker Show. Today we have a great topic. We're going to be talking about sourcing commercial debt in 2023 and beyond. And we're going to talk to two gentlemen. We're going to talk about what they're seeing as far as what type of deals are getting done, what asset classes, the big changes from this time last year. So please welcome John and Joe back to the show. And John, why don't you quickly introduce yourself?
Yes, this is John Police, one of the managing partners here at Credit Unity.
Hey everyone, I'm Joe Campagno, co-founder and managing partner at Credit Unity.
So today's discussion is going to be really interesting because we're going to talk to Joe and John about what they're seeing on their platform. So for you that don't know, they have a platform which helps commercial brokers place deals. Could be bank, credit union, bridge, hard money, construction financing, pretty much anything commercial financing. They're helping brokers, commercial brokers, source those deals. They have a platform, a robust platform, I'll add in, where they're able to quickly identify through their technology the most probable banks, credit unions, and other lending sources. So they see hundreds and hundreds of millions of dollars of deals through their platform. This is going to be a great segment because, as most of you know that are in the commercial financing space, lenders are constricting right now and asset classes are getting constricted. So, Joe, where do you see what's different now than last year?
Well, first and foremost, I think everybody should expect significant slowdowns in any process, right? Lenders are scrutinizing deals. Borrowers are either renegotiating deals or they are looking for equity and capital where in places where they didn't traditionally have to find them. They're looking for partners in deals where maybe they were strong enough in prior markets, but now they definitely have to come to the table ready to be really inspected thoroughly. So that's one of the big changes. And then naturally the asset class mix is way different. The days of office, long gone, right? Multifamily, industrial, maybe some retail, strategically. Medical office is a hot ticket item because that's an industry that's ever evolving, even though it has an office component. So we're seeing things in that arena. And John will dig into some of this, some of the things that he's seen too, but really creative deal structures are going to be something that, you're going to have to be ready for, whether you're the broker, the borrower, or the lender. I think really come to a deal with an open mind, with a timeline that maybe is a little bit exaggerated than you normally would, and really be ready to collaborate and understand the needs of all parties here. I think that's a tip for all people involved in this deal. And when we've learned at Credit Unity, having to manage that process for everybody, we've really learned how to balance that and provide the support where things are slightly unnatural and a little bit different from the way they typically have been used to.
Hi, this is your host, Beau Eckstein. If you'd like a demo of the Connect platform, you can go to loanbrokershow.com and schedule your demo.
John, you deal with more interactions with the commercial mortgage brokers, and you educate them on your platform, get them on the platform, and your platform's easy enough. When somebody goes on, they can figure out how to put a deal on the platform and then get quotes. What's your conversation? How's the conversation changed from now to last year, this time? How are brokers dealing with the changes in the market, and how can the Connect platform add more value than ever in today's market?
Yeah, it's a great question. So if you look at last year, we had a much different market. We had a lot more deals that were getting signed up. There was a lot more liberalness in the industry. Right now, we have a lot of constraints, and I'm not meaning we, but lenders have a lot of constraints on them. Specific asset classes, like Joe was just talking about, the ones that were big last year and really easy to fund no longer are today. They're scrutinized, and they're even maybe not funding them at all. They're completely ignoring them until the market changes. So that's happened. We have a limitation on asset class that the brokers are dealing with as a challenge. No longer, like Joe said, office, anything risky. Retail starting to come back, but really the focus this year was multifamily, industrial. And when you do see office is getting success in suburbia, but not in the inner cities, not in the metropolitan areas, those large buildings. That's the problem, child right now. So they're staying away from. So what other thing the brokers are dealing with is the lenders that they used to use last year and had a plethora of them that they can go to and they can send their deals to. That's now limited down to probably 10% of what they're used to sending their deals to. And that's not that because those banks aren't lending, but today their liquidity is dried up. They have to pull back. And maybe they lended in the first half of the year and they're no longer lending the second half of the year, or they drop specific asset classes, or the deal sizes have drastically been limited in size on different asset classes. So they're getting hit with a lot of moving target struggles and challenges. And what they see in coming to us, which is getting them to come on board quicker than last year, is that they see us as a national exposure to a variety of lenders. When you look at all the different type of lenders that we have there today, commercial banks, large banks, community and regional banks, and OCC regulated banks, and credit unions. And we have credit unions that are localized, small niche credit unions, to the large footprint regional credit unions in the areas as well. In addition, then you have life companies and private money and hard money lenders that we have on the system, and bridge lenders. And then being able to go into cannabis for those that have cannabis deals that are struggling with, it's not federally legal today. It's only statewide. So those challenges happen. So where do you go? And they're saying, I go to Credit Unity. And they have the ability to now expose that deal and get us looked at in a larger national setting with a variety of lenders that they just didn't have exposure to or need exposure to last year in the market in the last coming years.
Well, if I could add
to that.
John, if I could add to what John's saying, and I think he made a couple of great points there. Our Connect platform really allows the broker and their borrower to get almost a real-time pulse on the lending needs of the lenders that we've engaged with. We have access to thousands of lenders. Hundreds of lenders are active. And what they can do is turn on and off their lending profiles or change them on the fly. So when your deal goes in, maybe they're not lending in something today, but if your deal is still being marketed days later, maybe even a week or two later at some point in this market, if they turn that asset class on, they're automatically being matched back to your deal without you having to prompt that match, and then action can be taken. Because likely, if they're turning it off, it's for one of the reasons John mentioned. If they're turning it on, it's the opposite of what he mentioned. Liquidity or that asset class maybe is coming back for that particular period, and your deal is exposed to that. And I think another tip for the broker to give their client is just be ready to act quickly. I think one of the places where we see deals really hurting in this market is delays in getting key information that should be readily available. Have your loan document package ready in anticipation of a term sheet. Because when you get it, time becomes of the essence, because that capital is waiting to be deployed somewhere, because it's just so scarce. So I just wanted to augment some of the stuff that John was talking about, add a little color.
They may choose our one deal to fund, but they've got several deals behind that one that are ready and waiting in the wings to take that money as soon as there's a hiccup or some high risk that delays or stalls this deal that they're working on. They can shift gears laterally and have that money allocated to other funding opportunities. And we've seen that happen a couple times this year already because of delays and things like that.
100%. Right. And we're seeing things go to committee relatively quickly because the volume is not as high. So you may have your underwriting package ready to be presented. They can get through it. They can get to committee very fast. I used to feel like we waited weeks to get a committee date, where now it's like, oh, your package is complete. Underwriting's looked at it. We can get committee, this week or next. And really, there is bandwidth at other areas of the bank or the credit union or the lending institution where maybe there wasn't because of high volume. Now they're managing risk and the value of the dollars that they can put out on the street.
Yeah, and I think another big area we should talk about is that these banks and these credit unions participate together, right? And so you facilitate that. So even if the max loan this bank can do is $10 million, they can participate, and you can facilitate these participations, which is crucial because a lot of these deals getting done right now are banks and credit unions that are doing these localized deals. but they might have lending limits that are 5 or 10 million, and the deal's a $15 or $20 million deal. Doesn't mean that we can't put our participation together, and that's important too. And I think what you guys structured on the back end, you could walk us through how you're able to get those type of deals done as well.
Loan brokers, are you struggling to find the right lenders for your clients? Connect can help. Our platform matches your deals with targeted lenders you can trust, giving you access to hundreds of lenders with billions in available capital. Submit your deals on the Connect platform and get more offers in less time. No lock-in, no fees. Don't limit your potential. Get more quotes, close more deals, unlock your growth, and build your lender network.
Hi, this is your host, Beau Eckstein. If you'd like a demo of the Connect platform, you can go to loanbrokershow.com and schedule your demo.
There's a $51 million deal we're working with. That deal is well above the threshold for most lenders, at least in this market, right? But with the relationships that we build, right? Because we work with deal structures, we work with the relationships, and we're constantly interacting and helping you as well as the lending community bring these things together in the most realistic and risk managed way for everyone, whether it's timing or default or whatever. We're looking for opportunities for people to win on both sides of the market. So we were marketing this deal, and a lot of the response we were getting was, we can't really lend that much money. But if you find a participant that we can work with, we'd be willing to either take a lead position or be the participant. We were getting both sides of that. More and more, we're capturing this information as part of our questionnaire to the lenders. So at a glance, we know, can your deal be funded at closing? With more certainty than we hope to get a participant if you find your lead and they underwrite you properly. John, I didn't mean to cut off there. Was there something you wanted to add to that?
No, I was actually saying for you to take that one. So you answered it the same way I would have. But that's what we're seeing. And we're heavily involved in the participation part of the process as well. So we've done that with many deals where we've gone out, like you said, that limitations are out there as far as funding with a lot of these banks and credit unions and lenders. And we're able to go out there and take on that participation because we have such a national inventory of banks and lenders out there that we work with. And we know, based on their profile, they let us know what they play, how they play. Do they do lead? Do they participate? Or do they do both? So we've got that information, that data captured, and it allows us to quickly go to those participating lenders when we have somebody on a lead role to get a deal funded pretty quickly.
Gotcha. And we have relationships with large financial institutions that also specialize in lending relationships and participation networks. So we have multiple channels to quickly see if this deal has, let's call it legs to really see the funding table.
That's great. So if you're listening, you're a commercial mortgage broker, you're an aspiring commercial mortgage broker. I think the key of this conversation is, listen, the market's changing. It's changed. It's changing. And we're going to see a lot more changes over the next 12 months as this recession works through. So it's important now more than ever to partner up and get the best vehicles to work with to help you place your deals. And this is a value add type of service, meaning it's no skin off your back for working with credit unions. So it makes sense to get your deal quoted faster, get a term sheet faster, because placing debt, especially if it's a credit union or bank and it's a smaller market, is very challenging. So you're doing your client a disservice if you're not using the credit union Connect platform, right? And at the end of the day, if you put the deal on, and even if you have existing relationships, it's something you want to look at. But I also want to tell you to subscribe below to the Loan Broker Show. We're going to be putting out weekly content, and we're going to cover all topics on CRE, commercial real estate, lending, how to broker deals, case studies, and new lending products like seed-based financing, and many more. So you'll learn as you go, and Joe and John will be here as weekly participants, so it's going to be a great show. And so just tune in once a week, and you subscribe. You'll get notified when the show goes live. So anyway, let's end the show for today, and we'll see you on the next episode.
That's a wrap for this episode of The Loan Broker Show. We hope you found today's discussion informative and valuable. Don't forget to tune in next week for more insights and tips to help you grow your commercial loan broker business. If you missed any of our previous episodes or want to access additional resources, head over to loanbrokershow.com. Thanks for listening and see you next time.